Hello YouTube, name is Samuel, and today we're doing another Forex trading video. So I want to show you the 10 accounts that we're trading, and I'm gonna make a quick video about it. So as you know, we are trading the 10 accounts live through my Forex book or my FX book right here, as you can see. And just keep that in mind that this link here I put in the description. So if you want to check them out live, you're gonna be able to see it on real time. Yeah, real time. If you can see that I'm either losing money or making money. So as you can see, let's go up to account number one. Account number one, we have 1.68% of profit here. Okay, and because the account's like too new, it's way too much in the beginning. We barely have any information or any data, but we're slowly getting more as time passes. Okay, this is account number 9, 1.48. This is account number 4, 2.59%. Okay, as you can see the equity, drawdown, profit, margin. What else? Account number 5. Same thing. Okay, so we just need time here. Need more time. We have account number 6 as well. Account number 6 is negative because I closed some trades negative, but there's no problem. Okay, we're gonna get this money back in a bit. And we have all the other accounts. So if you want to check the 10 accounts one by one, you can click down below on the link of my link. Okay, so you know a little bit about how I trade and my strategy. And yeah, so that's account 1. So as you can see, we have 8,000% up margin level. And before I talk about the accounts, I want to talk about a little bit about the strategy and one thing I wanted to show to you guys. So as you can see, let's talk about the strategy that I use before I even cover up the strategy, before I even cover up the accounts. So as you can see, I have this resistant line right here, the red resistant line, and I also have the green support line. And this purple line here is an average price. Okay, so basically, right here is your USD, the currency pair that you're using. And there's one thing that I wanted to show to you guys, the reason and how I strategize my trade and why I open the trades that I open. What are the key factors? What are the points and the reasons why? So it's not totally random. So as you can see, there's a point of interest between Euro USD because they are the strongest currencies in the world. Okay, Euro USD because of the American continent and also the European continent. So as you can see, these trades right here, like these currencies, they don't go too far up or too far down, you know. So as you can see, you might come across going down for a little while, but then it goes back up. But when it goes too far up, it goes back down. So it's like there's an average here. So this is sort of the average. Okay, it could be here or here. So because we're talking about major currencies and major countries, and it's not a emergent country like Brazil, because if you don't know, I'm Brazilian, and my currency is like, if I trade on my country, I would be trading on the Brazilian currency. So I'm gonna show the chart to you guys. So just so you know, BRL USD chart. Just so you know, if you're from the US or somewhere else in the world, this is my chart for my country. Why is that? Because it is a emergent country. It is not a developed country, so it's an underdeveloped country. It's not first world country, so the economics are weak. There's also political problems in the country and many problems in Brazil against the US. So that's why the currency here only devaluates like over time or depreciates. I don't even know how to say it in English. Depreciates or devaluates over time, related to dollar, or according to against dollar. Okay, so the dollar's always going to be worth more money versus the Brazilian currency, which is real, the real currency, Brazilian real. Okay, just so you know. So let's do USD BRL out now. So as you can see, the dollar goes up, but my currency goes down. So over time, our money in Brazil depreciates. So that's what happens in most emergent countries, and I wanted to show that to you, just so you have an average, just so you can see the difference between an emergent country versus a developed country, or developed countries, which is US and Europe, or continents like the American continent versus the European continent. Okay, so as you can see here, like the chart's not going up to the point where like it just goes up or just goes down like almost to infinitely, right? Just like this currency right here. And this is where we take advantage on the strategy, because we are trying to find a balance here. So it's just for example, let's say the chart is below this average line, this average purple line here, we would be placing a buying position, for example. We're not going to do it. That's just the foundation of the strategy, okay? There are many other key factors to why we enter, but just so you know, like the skull of the strategy, the foundation, the basis of the strategy, that's kind of how I trade. And it's not just probability per se, but there's also economic factors as well, because of the interest, you know, import and exportation of these countries. That's why they have interest. The government of these countries, of this continent, they have interest in maintaining this average price. So both of the countries, they can benefit off of it. Okay, instead of just one being too imbalanced against the other one, that would be bad for the economics of the country and for the world overall. So this is why we're mostly trading majors and minors, okay? And your USD is a perfect example, okay? So this chart is since 1989, and as you can see, the chart does follow this this average price more or less, whether it's here or here. And just again, like I said, I want to show you the basics. So for example, in this strategy, let's say the chart's below this line, we would be only selling USD, for example. And if it's above this line, we would be only selling your USD, because we know that the chart's is going to go back to break-even point at some point. We don't know when. That could take years, okay? But we do know that over time, we have a probability of the chart going back to break-even point, unless there's a recession or some crisis, you know, or a pandemic, for example. But overall, the chart goes back to the normal price, just like, for example, S&P 500. Like for example, we had the pandemic here in 2020, but even though we had the pandemic, the chart went back up. You know, we had the 2008 crisis and 1999 crisis, and it doesn't matter how bad of a crisis we have, we always tend to get back up. And especially in an index that is this strong, such as S&P 500, we do know almost for sure that the chart's going up on the long run, okay? There's no guaranteed, of course, but we know that historically speaking, because of the strong economy of the world, because of the strong economy of the currency and stuff like that, we do have more certainty than just, I don't know, maybe trading on an exotic pair, such as an emerging country as Brazil, for example. It makes it so much harder because it has higher spreads, higher volatilities, and stuff like that. And I'm not saying that to shit over my country, but I'm saying that because it is the reality of the world, whether I like it or not, or whether you like it or not. Unfortunately, I didn't ask to be born here, and you also didn't ask to be born in the US or somewhere else. You know, it's just random. I mean, you were born in a country that you did not choose to be, and I was born in a country where I did not choose to be at as well. It is life, you know. Life is random. It is insane, and we just have to deal with it, you know. But I'm just saying that so you learn a little bit about the strategy. So like, this is the strategy that I trade, and this is like, it's almost like a course. So I want to give you almost like a free course, 100% free on Forex, because I really want you to know exactly how to trade Forex and why I do what I do, and how you can use it in your favor as well. So that's kind of how I do why I do it. That's where I developed and I came up with this strategy. I mean, I didn't come up with this strategy. I learned it from multiple people, but then I developed my own way of doing the strategy and trading without using stop loss, like I said, using proportional lot size, margin level, understanding about spread, swap, commission, diversifying the trades, and understanding about all these things, so we are safe on the market, okay? So that's kind of how it is. Now this is account number 2. Let's go to account number 2. Let me show it to you really quick. We have 4,000% on margin level, all trades negatives. Account number 3, margin level is at 5,000%, swap at $5, commission $0.60. There's a lot of margin here, so there's no problem with this account. Account number 4, Account number 4, we have a $10 off of swap. So as you can see, the swapping here is really expensive. And as you can see, let me show you something. Euro SEK, so Euro SEK. As you can see, if I right click on it and then I hit the symbol window option, you can see the spread. So the spread here is at 197. So the spread here is really expensive. So, some spreads of trades that I open are at like 2 points, and other spreads are at like 300 points, 197 points, like here. So you gotta take those into consideration. You gotta take into consideration the spread of your trade. You gotta take into consideration the swapping of your trade, if you're paying or you're receiving, because it really depends on the interest rates of the countries that you're trading at. Or the currency pairs that you're trading at, and it depends on the interest rate of the countries. So you're either going to be receiving money to place the trade, or you're going to be paying money to place the trade, and you have to see how much money you're paying, if there's any news on the market, because if there's any new or any impactful news, you're going to pay way higher, way more when it comes to spread, versus not having versus trading on a time that there's no new or any bad week, that there's important news coming up. Okay, so you got to take that into consideration. So spread, swapping, commission, also, like I said, diversification. And that's the reason why I trade on multiple charts, because even though I do trade on a proportional lot sizing of, I don't know, maybe 80 to 001 or 100 to 001 or 120 to 0.01, I still need to diversify. Okay, it doesn't matter if it's 3 trades, 4 trades, 5 trades, 6 trades, 7 to 8 trades, 10 trades. It really depends. And then the amount of profit I would try to get as well really depends on many things, many factors as well. Like I don't know if I'm going to be using trailing stop or not using trailing stop. The margin level as well. Like, for example, I'm not going to open a trade above like 2,000% on margin level, or something between 1,500 to 2,000% on margin level. Then I might stop opening trades until I have more margin again. And then I also have to take into consideration the swap that I'm paying, or if I'm receiving, I need to take into consideration hedging, whether it's a complete hedging or partial hedging. So all these details, they're going to help you on the long term to help you become a better trader. Okay. Okay, account number 5. That's account number 5, 5,000% of margin. Same thing. There's nothing to do here. Oh, also today's Saturday, so we're not going to be placing any trades, because I was going to record yesterday, but I was too busy and I didn't have time to record a video. So I'm recording today, but we're going to open a trade tomorrow night, because it's Sunday, or on Monday. Okay, and then I'm going to record another video to what I'm about to do with the accounts. So 6,000%, all trades negative. There's nothing to do here. Account number 7. Same thing, commission. The swapping here is a little expensive. 5.4, 5.4, 6.4 negative, AD, NZD, and Euro NOK. Let's check them out. So AD, NZD. Let's see the swapping. AD, NZD. Right click, simple window. So 2.0. Okay, the spread here is not expensive though. But I think when I opened this trade, the spread was expensive. I don't know. But I'm just trying to figure out why the swapping is really expensive here. And a lot of you guys that you don't pay attention into swapping, and you think that swapping is like doesn't mean a thing in your account. Like maybe you're just like paying $1 off swapping every day, or $2 or $5. But on the long run, that $5 could turn into $500 or $1,000 or $2,000, or maybe your whole account. So you got to take that into consideration. That does not mean you're only going to open trades in which you're going to receive a commission rather than paying to be stuck in a trade. But every time you do open a trade, you need to take into consideration if you are using proportional lot size, the amount of swapping that you're paying, how far would you let a trade, how far would it be worth it for you to have a trade open, and I don't know, maybe if you're paying $2 a day off swapping, how much that would be like a year, for example, or 6 months or 3 months. Because some of y'all, because we're doing swing trading, we're not doing day trading, we can have a trade open for months. And it's just annoying saying that, but it's just a real deal, and it's just it is what it is. And look at this, 540 off swapping, and I'm using proportional lot size of 0.02. That's crazy. That's crazy. I got to change it. I'm going to have to close this trade as soon as I can. So account number 8. Let's go back to account number 8. 3,000%. I mean, yeah, 2,899% or 3,000%. Nothing to do here. Also, I'm going to increase the proportional lot size of this account, which is 80 to 001, but I'm going to increase it to 100 to 001 or 120 to 001 to make sure I have more margin. Because if I was using 120 to 001, I'd have right now maybe $500 or $400 off drawdown, which represents 4%. And I'm trying to be as safe as I can. Account number 9. 6,000%. There's nothing to do here. 2 trades negative. I need to open another one, by the way. Maybe not 1, but maybe even 2. Really depends. But we're going to see what we're going to do. Now swapping here. Account number 10. This account, that's like the worst account. There's been no profit so far, and I already hit 10% of drawdown, which is really sad because of I got a bad wave on the market, but there's no problem because we're still using proportional lot size. But it's just the reality of the market. So as you can see, even though I might do everything right, I still can come across like hitting 10% of drawdown without me having any profit if I get to a bad cycle of the market, because every strategy is cyclical, and at some point your strategy is going to work better and at some other point might not perform as good, but it is cyclical. So all I have to do is just wait for the cycle to pass, and then like I said, if you're not paying like really expensive spread on your operations, if you don't have a really high swapping on your trades, and as you can see, I'm receiving rather than paying, so I'm not paying a single penny to be placed in these trades. So even though I have 10% of drawdown, there's no problem on the long run because I'm paying a very cheap commission. This one's fixed, so I'm not paying this every day, and every single day that passes by, I am receiving money to be placed at the trade, making my account a little bit safer than if I was just paying money. Okay, so time is in my favor here, and of course, it only depends now of the chart how far it's gonna move from my initial point, and if it's gonna depreciate more or go back to the break-even point. But so far it's okay, and as soon as this account goes back to break-even point, I'm going to change the proportional lot size of this account to make it more conservative so we can be a little safer when it comes to trading. So again, taking care of spreading the spreads, commission, swapping, margin level, which is number 4, proportional lot size, not using stop loss, and also developing a system, which is this system right here, which is a like iceberg system in which you're putting, like, I don't know, maybe the money that you trade on Forex will be thrown here on the tip of the iceberg, and then the rest of your money will be like, if you have a portfolio, instead of putting 100% in Forex, you're going to put just some money in Forex, which is the tip of the iceberg. And then you're going to put the rest into higher, more stable investments, such as, I don't know, stocks, or, I don't know, really, really strong stocks, maybe Apple stocks or treasury bonds or any other investment that brings you liquidity and can give you a more solid, stable portfolio than having 100% into in fixed, not fixed, but variable income, which is really risky. So that's kind of how I do it. Okay, so I hope you like this video. I could make this video way longer, but because I don't want to make this video too long today, and there's also not many trades that we're gonna do today. Not any trades at all. I just want to keep it simple, but don't worry, on Monday we're gonna be opening more trades, and then I'll explain it to you a little bit more of the strategy, how I come across it, what do I do. I taught you a little bit of economics when it comes to the currency pairs. For example, Euro USD, why Euro USD has an average point, an average price, okay, more or less. Economics foundations, which is really basic, but it is a start for you to understand the Forex market, the strategy that I do. I taught you about proportional lot size and pretty much everything I do, okay, portfolio management, all these things that I learned throughout many years. I'm teaching you in like a 10-minute video, which is insane. So I hope you can get something out of it. Okay, so here is the S&P 500 index. This is my accounts, as you can see. and I hope you like this video. So if you got something from it, let me know. If you have if you have any questions, let me know. If you learned something from it, please hit the like button, subscribe for more. I'm gonna put my FX book link right down here, and also one of the brokers that I use is C Trader, because there are many brokers that you can use. You can use C Trader, you can use MT4, MT5, you can use some other traders, some other brokers as well. I also use ACAP MT4, but currently I'm using C Trader, which is really good and also intuitive, because I can, not only do I have the desktop version, but I also have the mobile version, so I can trade on my phone whenever I want to, or at least check the trades when I'm not using my laptop or my computer, which makes it more intuitive and easier, okay, for you. So yeah, I hope you like this video. I'll catch you in the next one. Subscribe for more, and if you do like this type of content, make sure that you stay tuned, because I'm going to be teaching many things other than just Forex. Okay, Forex is just one thing, but we're going to be covering up many investments here. So not only we're going to be talking about investments, we're going to be talking about entrepreneurship, making money online, a little bit of economics, investment risks, crypto, organic traffic, paid traffic, web design, creating your brand, leveraging your money, leveraging your life systems in which you're going to be building, where you're going to be leveraging your career to make more money in the future, and I don't know, maybe creating assets for you on the internet, such as online, such with active income, passive income, and so on and so forth. So it's going to be a really complete channel, and there are probably many things that we're going to be covering up in this channel for the next years. And I hope you like this type of content, okay, because you're definitely going to love it. You're definitely going to learn a lot from it, okay? So I'll see you in the next one. Peace. Have a good day, and I'll catch you later.